Hello traders, Gary Wagner here, just about 11:30 in Honolulu. It is 3:30 in New York. It is Monday, December 7th, and this is Trending Markets. We do have the Dow Jones Industrial Average coming off of the triple-digit gains that we saw on Friday to give us some triple-digit drawdowns, although these start with ones and the Friday session started with a 3, so roughly a third of what we saw in terms of a net gain on Friday given up today. You can see the single-day candle here for Friday, and this being today, closed roughly 100 points lower on the day at 17,730.51. Now, in regards to our current trade, we did tighten our stop up this morning. I'm questioning whether or not we tightened it too quickly or too soon, but in essence, we got into the market at roughly 2053. We exited the trade by moving our stop, I believe, to just below 73. So we picked up the difference between 53 and 73, or about 20 points on the trade, $250 a point, 5,000 per contract in terms of what we saw in terms of a net gain. Not bad for a single day trade, but as you know, I don't like to day trade, but my sense was that if we saw any kind of weakness in the market, I wanted to at least protect the profits that we already had. Now, E-mini S&P currently back up off of the lows. The lows were 64.50, high 20.95, and closed at 2081, off about 7.5 points, or about 0.4%. So traders, we are now flat in the market. We are looking to re-enter our Standard & Poor's trade, but I want to see how the market reacts over the next couple days. Realize that next Wednesday we will get some sort of an announcement about a rate hike from the Fed as the final FOMC meeting of the year gets underway. We are looking at two currencies at play. Dollar index is on the top, euro dollar is on the bottom. If you recall from what we saw last week, we saw this market literally fall out of bed. This is the dollar, one of the hugest single day moves I have seen. If you look throughout this entire chart, you see one day that had almost the same length, maybe a couple of days, but very, very large move. But following that, on Friday, we did get some support. We talked about the fact that this is a bullish harami, and that's our confirmation. Now, in terms of a two-day candlestick pattern, the harami patterns are the most modest, or meekest, I should say, of these types of pivots. Of course, an engulfing bullish or a piercing line behind the engulfing bullish and a three-river morning star. Those are really some key pivots that we look for and have a lot more strength. But nonetheless, this is what we saw today, which was a bullish harami. As I said the other day, the best we can see in terms of a candlestick pattern on the euro dollar is an incomplete dark cloud cover, because it no way goes near the midpoint or below on that. So we're looking to see what these currencies are going to do. My sense is we're going to see strength return in the dollar, especially with quantitative easing still going on in Europe, and we're really winding it down, especially if we're going to implement the first rate hikes that we have seen in quite some time. But traders, the big news today was oil just literally melting down, going back and to some lows that we haven't seen in quite a while. This is our weekly chart of crude oil, and you can see market, first of all, closed off almost 6% on the day, lower by $2.28 per barrel at 37.68 with a low of 37.50. So we're just off of the lows. But more importantly, this weekly chart is really telling us the tell of the tape, and this is what we can see. When we look at the most recent lows, and these were the lows that it hit at 38, we have now broken below that price point. So just as gold, as you know, we entered a short trade in gold, but with what we're looking at with the crude oil market, we could easily see now that it's broken below this. I don't know where it could go, but it could go. My initial observations is somewhere between 35 and 36. So we might have some ways down. It could even go into the low 30s. And that's something we'll just have to see. But there's a lot of oil on the market, and the production hasn't slowed down. So we're going to stay flat, at least for today. We'll send out a special trade alert, but we're going to look at the dollar, crude oil, as well as the Standard & Poor's 500. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.